both of you really highlight it's sort of the same three issues that we're talking about, Kevin, and that trade issues, number one. You're worried about what the minutes say and the Fed, whatever that is, and then how earnings play out, whether we have an earnings recession or at least slowing growth.
Yeah.
So those are the three. Are there anything, does the NBA factor in any of this? Are those the only three things we need to be thinking about?
Look, I think what's driving volatility out there's a lot of the trade disputes that, continue to go. And I think we need to have a better deal than just kind of a quick deal. And then earnings season
for much of either of them.
No, and earnings season's about to kick off. Everybody always resets their earnings so they can beat and feel good about themselves. But I think the discussion of, what's the forecast looking forward, and I kind of think that the rest of the year is going to be washed out. It's not going to be too exciting. And where investor attention is going to be pushed is to 2020. And I think the bar has been set a little bit lower. We've seen some weaker quarters here in the last couple, which sets up probably for some reacceleration next year, which is where we see the hope. But we still see that volatility is going to be here probably through the remainder of the year. And people remember what happened last year. So there's some concern. But now we have the Fed behind us as opposed to in front of us fighting the market. So that's one good thing that's changed. But there's certainly a lot of uncertainty. And, we're a bit cautious out there right now.
Yeah, I think earnings are always important, but they're particularly important in this third quarter. Year over year, it's forecasted to contract around 4%. But importantly, revenues are forecasted to increase 4% year over year. And that validates the strength of the U.S. consumer. Remembering that third quarter of last year, we had 20% year over year earnings growth. So it shouldn't be too surprising that we're slowing. But if revenues continue to grow, that shows the U.S. consumer is healthy. That could lead into what I believe will be a record holiday shopping season.
I mean, that really seems like, well, we're down 165 now. Things have been getting worse. But I'm not saying that things can't happen, but we've been buffeted back and forth so many times by things are getting, there's positives, there's negatives, there's positive, there's negative. And then the Fed, they're probably going to cut, but the wild card really is what happens with earnings and then the outlook from the companies, right?
Look,
that's going to be the nearest data point. So would you'd be buying dips based on that, or you'd be lightening up for the long term?
For the balance of 2019, I think you look at consumer discretionary, particularly areas of e-commerce.
To lighten up or to buy?
I buy.
You buy?
I buy. Certainly on the dips, I think there's more upside potential, but there's going to be bouts of short-term volatility along the way, Joe.
Yeah, we've been buying on the dips here. What we'd really like to see is the capital spending come back, and I think that's been weaker out there. Clearly, the ISM numbers last week were not great. But one bright spot that we do see is in Taiwan with Taiwan Semiconductor. There's a lot of activity there, and there's, we think, going to be spend in the semi-cap equipment space going into next year. You'll see Samsung today talk about memory and so forth, but we think that there is a recovery in that area next year, and so that's a bright spot that we're looking to deploy capital.
Either of you follow the political machinations, the likelihood of whether it's impeachment or an Elizabeth Warren presidency? When do you start factoring those into what you do with your portfolio?
I think that starts to really hit the markets once we find out who the Democrat candidate is, and as we get closer and closer to the summer of next year, when the election cycle really starts to heat up, then you have to start positioning for the potential likelihood of who's going to be in the Oval Office.
But right now, it's not even on your radar.
Right now, it's not on my radar.
There was an article.
Earnings are on my radar.
Article earlier that says it's not too early to start preparing for the possibility of an Elizabeth Warren presidency. And I think they're talking about lightening up on position.
Look, I think healthcare's been hit pretty hard. I mean, you look across that entire channel, all areas of kind of discovery has been under pressure, and it's probably a bit because of that, in my opinion. I don't think either candidate is really going to stand up and defend. They want, lower drug prices in an election year. So it's kind of the whipping child of the election. So, that's an area that I think you have to be a little more cautious on.